Thank you for tuning in to Saal Mubarak. It is our annual ritual on Diwali wherein we do one fun but serious conversation on markets to try and pick the brains of that 1% who we think can give us really good guidance of what the new Saal would be and whether the Saal will indeed be Mubarak from an investing perspective. Our guest on this edition is Mr. Nilesh Shah of Envision. Nilesh, great having you. Thanks for joining in.
Always a pleasure, Neeraj, and happy Diwali, happy New Year, Saal Mubarak to you, your entire team, and all the viewers right across the length and breadth of this great country that we are in.
Yeah, I like that tone, the great country that we are in, simply because from the looks of it, Nilesh, we seem to be charting our course slightly better than what the rest of the world is on the macro front. So put this into perspective. This year, I mean, you could argue this somewhat as well, but at least this calendar year. So the better part of this somewhat has been has been flat from a headline index perspective. What do you anticipate the next somewhat to be like in light of the fact that there are select macro challenges that we are grappling with on the world side, and India is joined at the hip to the world, whether we like it or not.
Absolutely, Neeraj, and I'll probably start off by actually saying what the IMF has very recently called out, that India is the bright spot in an otherwise darker horizon. I think the timing of this statement couldn't have been better because the festival of Diwali is all around brightness. It's all about brightness. It's all about light. And for IMF to call out India to be that bright spot in an otherwise darker horizon, I think is perfectly apt. And I think it's a great way to basically roll out, the upcoming Samvat. So while yes, the Samvat gone by has been a period of challenges for the world, and one could have never imagined that the developed world would have inflation rates which are in high single digits. And it's quite commendable that India has really managed itself so well in an otherwise such a challenged environment. Otherwise, India honestly is in the past was way more fragile and way more vulnerable than what the developed world has been. But I think at least I'm seeing this for the first time in my lifetime that India looks a lot better than what the developed world is. We don't have so much of a challenge in terms of inflation. We don't have challenges of availability of energy. And we seem to be essentially chugging along quite well. So going forward, I think it's going to probably be a relatively better year than what the year has been. Because the year gone by, we've seen essentially a lot of selling by FPIs. We've seen inflation, inch up to about 7.5%. We've seen growth beginning to moderate a bit. But the way I look at the forthcoming somewhat, I think it looks like inflation perhaps has peaked, and we could get growth probably which is a tad better than what is essentially being kind of expected in the next 1 or 2 quarters. So on the whole, I see the somewhat going forward to be a year where growth could be a bit better, inflation could be a lot lower. I think the reforms program of the government will continue. And the big change that I'm looking forward to is where FPIs or foreigners who have been sellers actually come out and become big buyers. And to me, that is essentially going to be the joker in the pack. If that does happen, then we could be in for a great time in the upcoming summer.
Okay, let me ask a follow-up question. I had some other question in mind, but since you brought out FPIs, I was reading a note by ICICI Securities this morning, quite curiously, wherein the strategist is saying that the recent not so heightened selling by FPIs in Indian markets at a time when QT and interest rates are on their upswing suggests that FPIs probably preempted this, and therefore the heightened selling seen in the first 6 months, and maybe we might be reaching a peak of the kind of selling that is done. Now, my question is, Nilesh, to your mind, to a lot of people's minds, QT is the big joker in the pack, which is not quite understood because of the balance sheet reduction. And a lot of people believe that will result in liquidity being lower for equities at large. Do you second that, or do you believe that we're kind of reaching peak levels as far as FPI selling goes?
I probably believe that we have reached the peak, or we are probably around the peak. I don't see the FPS selling to gain even further momentum from here. From last October to this October, we have clearly seen relentless selling, and I think that selling started way before. Even there were talks of rate hikes and liquidity reduction and all of that. And towards in the last 2 or 3 months, we've seen those 1 or 2 months where the FPS turned out to be net buyers. So I probably think somewhere that the peak is behind us, and it's quite possible that over the next 12 months, over the course of the next Samvat, we will actually see the FPI buying come in. And what could it be is because I think clearly it's going to be reallocation. Clearly, emerging markets have fallen quite a lot. I think this calendar year, the emerging markets are down 30%, the emerging market index. Versus that, India is probably down about maybe 10 to 15% ballpark range. And what investors, any investor in any part of the world looks at two things. He looks at outperformance and he looks at better growth. And on both these boxes, India ticks in a pretty kind of a strong and a bold manner. And I see these as essentially the big trigger, which will essentially get in FPIs back into the market. And keep in mind that for the first time, Neeraj, I think in the last few quarters, we've seen that the share of domestic ownership by domestic institutions, has gone ahead of the ownership by FPIs. What this signals, number one, is the risk in terms of FPS selling is a lot less than what we have seen. And two, if at all, there is room for them to buy, there is room for them to again catch up and get back to their historically higher levels. So I clearly, from this single dimension point of view, I think that's this single dimension is a source of optimism for me.
The relativity of India being expensive to the rest of the EM Asian Pac, and if indeed the world were to recover, then the probability of those markets actually doing better than India, because India has been more or less, say for Brazil and maybe a couple of others, been a rank outperformer. You don't think that could come and influence the FPI decision to invest between India versus some of the other markets, say a Kospi, say some of the others, say China, for example?
Neeraj, I've seen for the last 5 years, 10 years, 15 years, 20 years that I have been in this market, I've always seen India trade at premium valuations. I actually draw this comparison between, say, HUL and Tata Steel. And you always see HUL, which trades at premium valuations, no matter what we like it, but it always looks expensive. And Tata Steel always looks cheap. And I think it's something similar. If I were to kind of look at India, India to me in the global context is the HUL, and maybe any other market like a Brazil or a China is probably the Tata Steel. Okay. I think the other big difference, Neeraj, is that I think some of these other emerging markets are commodity plays. Now, we can't have a scenario where interest rates are going up, demand is going to essentially soften, and in that environment, commodities still continuing to do well. Okay, I honestly, it doesn't make sense. And if that be the case, I don't see how many of these emerging markets will do well. Versus that, India is a growth market. It's a structural market. It has everything that what global investors look forward to, which is in terms of a large market, a large economy, a vibrant market, many themes to play, many sectors to invest, a very large universe of high quality companies. It has everything that what you would want as a global investor. Number one. The other big event Neeraj should really watch out going forward in the next Samvat is India's inclusion in the global bond indices. And
Sure.
that will have a positive impact, not just for our bond market as a source of capital for our currency, but it will have a nice positive rub off effect even on equities. Where investors will say, okay, fine, yes, India as a bond market is good, but how about me getting back into India on the equity side? And so I think these are some of the things which are going for India, which will differentiate India or continue to differentiate India from rest of the emerging market pack.
Interesting. Let's just one word on the near-term stress that may come in as a result of the current account deficit issue that we have, right? If indeed the currency were to stay where it is, if come winter and if China opens up and if crude prices move higher, then the higher CAD hurting the weaker rupee, a bit of a vicious circle, and what that does to sentiment as well. How do you what's your feeling about it?
So Neeraj, yes, that's a near-term headwind that we as an economy continue to face, and unfortunately, there's no wishing away, that kind of a risk or a headwind that is there. But of course, this hinges quite a lot on whether crude oil prices go up. I'm not quite sure if China again gets back to normalcy, will that mean that crude oil will essentially go up? I'm not quite entirely sure about that. It may go up maybe for a week, for a fortnight. But is that something which is very sustainable? No, because we know that crude is totally an artificially controlled market. It honestly is more a function of supply, that what OPEC and some of the other oil producers, what's the kind of output that they continue to generate, rather than demand cropping up from a market which essentially has been shut or closed. So I've seen that most of these commodities, including crude, are more of a factor of supply rather than a factor of demand. So I'm not entirely sure whether crude is necessarily headed for significant highs. It's quite possible that we may not see those lows which we saw in 2020 or 2021, but I'm not entirely sure whether we're going to go back to those highs that we've seen in the early part of 2022. So I'm not yet so kind of yet worried, but yes, theoretically that risk remains, and there's no way to wish away with that. The only thing that we can do as a nation and as policymakers is to ensure that we continue to drive our exports in a significant manner. And I think, of course, things like GST, PLIs, etc., are some of the reforms which have been undertaken and which have started to pay dividends. They've started to bear fruit, and I see that momentum kind of only gaining more intensity in the coming Samvat and even beyond. That to me is the only long-term hedge that we have to our conventional, traditional problems of CAD and trade deficit and all of that.
Hmm. Nilesh, you're sounding constructive and optimistic. So let me try and understand where is it that you find favor now? Where is the larger bent of the portfolio currently, and are there some meaningful changes that you made to the portfolios that you manage or advise? Because there are a bunch of new themes that have come up in the last 12 odd months, which may not have the life of only the next Samvat, which may last for a few Samvats, but still, you are looking forward to seeing how they do over the course of the next 12.
Yes, Neeraj, and of course, as portfolio managers, we need to continuously keep, in a way, tweaking and allocating and reallocating the capital that we essentially kind of manage. Some of the themes which have really kind of, in a way, come up in recent times, and I'm not saying necessarily, they probably have come up in the last few weeks, a few months, but some of the themes which look very, very strong. Number one is, I think some of the tier two lenders, they seem to be in a great shape. The tier two private sector lenders, of course, the larger banks will do well, but some of the tier two banks, some of the specialized lenders, I think are going to do incredibly well. Challenges of asset quality, etc., are behind them. They seem to have managed their ALM things really well. And of course, the nominal growth of the GDP, which is that after a very long time, we have entered into basically a double-digit nominal GDP growth rate, which means better times in terms of demand for credit. So on the whole, I think that's that one pack which I think is looking good for the medium term. So that's one. The second one, of course, which has been the flavor of the season, is the defense pack. And what looks to be a flavor of the season, my view is that this is going to be the main course for the decade ahead. Multiple drivers, be it Atmanirbharta, indigenization, exports, more private participation by the private sector, our geopolitical imperatives, and all of this, and India, in a way, gearing up to just not be a prosperous nation, but to be a strong nation. I think these are some of the compulsions, some of the imperatives, some of the drivers which I think make defense an incredible growth opportunity for not just the next one Samvat, but I think for the next decade. So that's the second big area. The third area, of course, is around capex, manufacturing. That's essentially the space which I think is going to do kind of really well. So I think these are some of the businesses, sectors, themes which look really good. for the medium term, not just for the next one Samvat, but I think for the next maybe 2, 3 years as well, or maybe even for a decade. These are some of the things which look incredibly interesting.
Mm. This somewhat saw a return of few things, right? Or a mean reversion. Autos, which were not doing well, came back. IT, which was doing really well, has gone through a slumber. Now, you look at both of these pockets very closely, Nilesh. What's your feel about what could happen ahead?
So Neeraj, I think in IT, so there are three things which are happening. First of all, the additional demand which was coming in through digital transformation or discretionary initiatives, that I think is behind us. I think our IT companies will essentially, so that initiative was helping our IT companies to basically grow in double digits. That is off the table, and that will have a meaningful impact on some of the larger companies. So growth rates, which probably used to be more like 12 to 15% for the larger companies, I think is going to be down to 8 to 10%. But while the world is staring at a recession, the non-discretionary part of IT services will continue to chug along, which means that growth rates of about 8 to 10% in dollar terms, constant currency, I think is there. That's going to be there. That was always there. That will remain. There's nothing which is going to take it away. The third thing is that the premium valuations, the fraud that we were seeing, I think has kind of come off quite significantly. I think it's entirely gone away for some of the large cap IT names. It's beginning to kind of go away for some of the tier two IT services companies' name. So my view is that it's quite possible that for maybe another quarter or two, we could still see IT to kind of remain more like a market performer, and probably some bit of earnings to catch up. And I think post a period of maybe a couple of quarters, which means that I would say probably for the next financial year onwards, I think the IT will be back in terms of as an investment kind of a place to be in. So maybe right now one should still use it as or have a strategy of accumulate or buy on dips and then probably get a little more aggressive after a couple of quarters. Keep in mind that from 70 odd rupees to a dollar, we are at 82 rupees a dollar. That's like kind of a 10-15% kind of a depreciation of the rupee or the appreciation of the dollar, whichever way you look at it. I think that itself, I think, is a huge source of cushion, comfort, and maybe an earnings driver for our IT company. So I'd say probably right now, maybe have a neutral stand and then probably be watchful over the next couple of quarters where valuations turn even more meaningful. That's the time to step into IT. But I think other sectors, other themes currently probably are going to probably be a high priority or should be a priority versus the conventional IT services companies.
Autos?
Autos again looks very good. I think the auto demand is back and I think it's going to gain momentum. Clearly, I think what looks the most attractive in the auto space is the commercial vehicle pack. I expect infrastructure creation, manufacturing, mining, industrial activity, transportation, all of these things to essentially kind of post pretty strong growth. And therefore, the demand for CVs, I think, is coming back, but I still think has a long way to go. So that's one sub pocket of autos which is looking better. The second essentially is, of course, passenger vehicles. And within that, of course, players who have a sway over the SUV segment, I think will do better. So that's the second. And of course, we have yet to see who's going to be winning the race for EVs. Early days, there are several contenders. The jury is out there. Who's essentially going to be the champion? A lot of challenges right now, but I'm quite sure in the course of the next Samvat, we will see that champion in the EV space. So that's an interesting space. So I think these are the three sub pockets of autos, which look way more interesting than just the very generic conventional passenger cars or the two-wheeler space.
You spoke about the need for exports, Nilesh. What about non-IT export-oriented themes, the smaller ones? I mean, for textiles, the season is gone, even though the balance sheet may be deleveraged. Specialty chemicals are facing some of the other headwinds around price movements, etc. What about some of these non-index representative export-oriented themes?
So for now, Neeraj, I think one has to be careful. The next 2 to 4 quarters could be challenging for them, and the challenges could be twofold. That in some cases, demand itself gets sluggish. especially if you are dependent on consumer demand in US or Europe, like say a textile sector. I think the headwinds are already emerging as we step into this Samvat, as we step towards, and a lot will get kind of reflected how the Thanksgiving season and how the Christmas season goes between November, December. So in the early part of the coming Samvat itself, I think there will be indications, but I think it will be safe to assume that that pack is going to get sluggish. So I would be a little cautious on some of those segments in terms of demand. I think the chemical space is in for very long-term growth, but in the very short term, there are going to be margin pressures. Be it pharmaceuticals, be it specialty chemicals, these are some of the pockets which will witness challenges in terms of margin. So I don't see a problem of demand, but I see a problem of margin. So again, I would put this basket also along with IT services. That means that the entire export bag, be it IT services or the manufacturing pack, I think is going to basically be in a bit of a doldrums for the next 2 or 3 quarters.
So Nilesh, in this optimistic piece though that you're painting for us, what is it that you're watching out for? I know black swans are never envisioned; they come out of the blue. But I'm still trying to understand what is it that you believe could be an issue which the world may not be quite talking about as yet. Maybe.
So Neeraj, my experience over different market cycles, and I've just seen is that first of all, I think corrections are pretty much normal to expect. We could pretty much have a flat year, we can have a great year, but we will always have corrections along the way, and these corrections could be in a broad range of 10 to 20%. We've seen this in the early part of the summer gone by, and we saw how markets were between January to June. And so 10 to 20% corrections could be for anything and anything. But the big correction that we really kind of, in a way, which gets talked about and which is very, very difficult. And it typically comes in from basically a low probability, high impact event. If I were to kind of go back 2001, it was 9/11, which essentially kind of in a way tested the depth of the bear market and laid the foundation for the next bull market. 2008 was all about the Lehman crisis. 2020 was about the COVID thing. These were events which none of us had even dreamt of, and they happened. And I think it could be something similar. We don't know if there's some event in some part of the world which could come and hit us out of the blue. And these are things which probably can happen any day, any time of the year. Very hard to kind of anticipate. But I have seen that in the past, the kind of bear market, I mean, whatever we call as a bear market, really happens when there's an event. And unfortunately, none of us can see it, none of us can be prescient about it, and we have to just take it when it happens. So that it could be an event like that. And I think policy makers who currently, of course, seem to be on a drive or an overdrive to hike rates to basically, in a way, conquer inflation, I think will probably stop only when an event like that happens. Otherwise, I think they probably will just continue and overdo what they are doing. So my view is that it will have to be some event which could probably happen at some point of time. Hope it doesn't happen, but if it does happen, we probably have to just be kind of ready, take it in our stride and move on.
Okay. New resolution, Nilesh, be it on the health front, investing front, what have you, for the new Samvat.
No, I think just keep doing more of the same, all the good things that you keep doing in terms of trying to kind of staying fit, staying healthy, reading a lot more, trying to kind of read a lot more diverse stuff, trying to kind of become more multidimensional. I think these are some of the kind of things that you would want to continue to do even going forward.
What's the addition on the reading front?
I think interest in geopolitics. I think that's kind of gone up quite significantly. Probably earlier I didn't know, I didn't read too much in terms of what was happening around the world in terms of the geopolitical side. I think going forward, I think it's important to kind of really try and understand, especially with what's happening around the world and every country. And it's quite possible that now politics is shaping economics. So I think it's important to, in a way, get that dimension as well.
Okay. And amongst continuing doing good things, you'll be talking to us, Nilesh. So we hope to see you continue talking to us more frequently during the course of the new Samvat.
Always, Neeraj. That's always a pleasure. And thank you so much. And once again, wishing you and the team and all the viewers a terrific Samvat ahead. And once again, Saal Mubarak.
And to you and your team and family, Nilesh, thank you so much. Diwali wishes and a great festive season. And to all our viewers, this time, once again, a very happy Diwali and Saal Mubarak.